Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We kind of get into what's impacting mortgage rates on a daily basis. So if you haven't seen these reports, we kind of get into the week ahead, what's going on a daily basis, and give you what's the scoop of what's impacting, whether if it's headline news or if it's something on the economic calendar or some geopolitical um, type of item that might be affecting, or perhaps maybe the sentiment just changed and doesn't. There's no logic to it, and sometimes the sentiment change where good news and good news is bad news and vice versa, and you may not know that. So we're here to kind of delve into that information and try to provide that for you. This video is good for those who are looking to refinance or purchase, those who are typically watching rates. Hopefully this will be good information for you to make a nice informed decision whether if you want to lock in or now is a good time to lock in or with your purchase or with your uh, refinance. So a little bit about myself is I am a loan officer. I do work with the national lender, so we do lend in all 50 states. I'm here to help you guys out. We're here to answer any questions you might have, whether it's about mortgage programs that's available out there, the rates, or different process that's going on out there. We can help you out with that. We love to earn your business, so please give us a shout. We'd love to be able to talk a little bit about rates or programs that might be available and how we can assist you with obtaining your objectives, whether it's a refinance or purchase. We can help you guys out. So, without further ado, we'll jump right into it. We're going to start with the economic calendar, and I'm going to do a little bit a different economic calendar because this gives information, but I have another one here that gives a little bit more information today. So the retail sales is the big report being generated today, and for the month of September. So August it rose 0.7%, but forecasts were calling for a negative 0.2% for the month of September. They thought after August things might slow down a bit. However, it kept that same pace at 0.7%. Now, the other report didn't show this one, excluding autos, and I thought this was kind of important because when you sometimes the autos are big ticket items and they can skew the numbers a bit. So as you can see here, in August it was up 1.8%, and forecast gone for a 0.5%, and it still continued at 0.8%. So even if you take out the big ticket items like autos, retail sales was doing extremely well. So investors are liking that, and we'll touch on that here in a second. Uh, but we also got the New York Fed manufacturing, which is also known as the Empire State Index building or Empire State Index for the month of September. So this kind of collects the manufacturing data around the New York region. It had a 34.0, 34.3 on the back in September. This is a pretty high number here. So basically zero, anything below zero is contraction, and above that is expansion. Forecast is supposed to be a bit of a dip down to 27. However, it was a much steeper dip down to 19.8. Now, 19.8 is still a decent number out there, but it is less than what they are and what they're expecting. And we'll just keep our eye out. We did have a month prior to that where I believe August was like that, where it dipped down to somewhere around this level and then jumped back up to 34. So we'll keep our eyes on it. I wouldn't be too concerned about at this point. But a lot of this has to do again with the supply chain. We're just not getting the materials in there, and then of course labor. So sometimes these manufacturing is working so that way, if they don't have the materials coming in, they're not bringing in people to go ahead and work with that. So that's why a lot of things are so hard to get a hold of right now. So it's not just on the delivering side of things where we have a lack of truckers, but also manufacturing these items as well. Now, lastly, we also got the consumer sentiment, which is a survey brought out by the University of Michigan. We had a 72.8 back in September. A forecast gone for uptick to 73.1. However, it did downturn a little bit down to 71.4. So let's go ahead and take a look at the. We'll talk headline news. Stocks are up. They, of course, like the retail sales, that was a big thing for them. There was also earnings reports coming out too. So right now, we get the financials are coming out. Goldman Sachs hit the head, and they really like Goldman Sachs data that came out today. And as a result, all the stock markets for the most part are up. They do consider banking and that kind of see where banking is at to kind of get a start of where things are at. And so far, the banking industry is doing very well in these terms here. So we'll take a look here at the mortgage-backed securities, see how mortgage rates are doing. We're down about 13 basis points. That would be kind of equivalent, depending on the timing here. That could be equivalent for a lot of lenders to come out with maybe about 1/8 of a percent in the rate drop. So usually anything above 12.12 is the basis for people lenders coming in with any price changes. So in this scenario, it's possible that a lot of lenders could come in with a little bit worse, either with pricing or it could be enough to maybe knock it down about 1/8 of a percent. So let's take a look and see what so far it's today. So see we're way up here and we dropped a bit, and we even were dropped down here, came up, and we worked our way back up, and we came back down a little bit. So as you can see here, we've had some fluctuations here, hence these little wicks here. What those represent, the different time frames. All right, so let's go ahead and take a look here at the yields. Yields did climb a bit. We were down to 1.52, I think, yesterday. So it jumped up about 0.5. So we were way down here. Now it's jumping back up. It's climbed that technical floor, which now is a ceiling, and it's trying to work its way back up to the next technical ceiling again, which was the one we were trying to get below, and look like we're having some success, but unfortunately it looks like it's coming back up. So we're back up to about 1.57 right now. So this is something definitely we'll want to keep eye on, because this will can put restrictions on mortgage-backed securities, the liquidity purposes of how we can, if we can get some improvement or not. So this could add more pressure to mortgage-backed securities. So be cautious on there, okay? And last but not least, let's take a look at the national averages. The 30-year fixed at 3.14, and the 15 years at 2.52. And of course, these are built in with points in there. So if you guys are ever looking at these and figuring that these are just like your no point, no, they do have a little bit of points in there. Usually, sometimes it could be like a half a point, or 0.625, or there's usually a little bit of a points into these, built into these. So again, take it for a grain of salt. Everybody's a little bit different, but they should be relatively close to that, as it's kind of more, again, a national average of those. All right, folks. I hope this video has been useful for you. If you like what you see, please smash that like button. We greatly appreciate it. It certainly helps out our channel here. Follow us. We greatly love to keep in touch with you guys. And again, we're here to help. So if you guys got questions about anything, we're here to help. So please feel free to reach out. We'd love to be able to talk with you guys. And if we can earn your business, even the better. All right, folks. Have a wonderful weekend. Enjoy your day. And we'll look forward to see you guys on Monday. Take care.